Hey everybody. So a few of you had questions about a few of the problems in chapter 10. So I'm just gonna try to work a few of the problems out here. Actually, I'll just do one on this video and I'll make separate videos. I think it makes it easier to look at later, especially if you only needed help with one. So here's the first one. Bon Nebo Company, good Nebo, I don't know what Nebo means, sold 15,000 annual subscriptions of Bjorn for $65 during December 2015. These new subscribers will receive monthly issues beginning January 2016. In addition, the business had taxable income of $616,000 during the first calendar quarter of 2016. The federal tax rate is 40%. Quarterly tax payment we made April 12th. Okay, there's a whole bunch of stuff going on here. So it wants us to prepare the current liabilities section. So the first thing is the advances on magazine subscriptions. So in essence, we received all this money, but we haven't actually delivered the magazines yet. In fact, we're not going to deliver them until next year, but it does seem like we are going to deliver all of them in the next year. So between now and next December. So I'm going to just go ahead and figure out how much that is. Let me pull up a calculator by doing 15,000 times $65. So $975,000, that's money we received, but we still owe in the sense that we owe the magazines to the people. So I'm going to put 975,000 as my advances on magazine subscriptions. Again, your numbers will vary since this is a what do we call them? Algorithmic problem. And then our federal income taxes payable is going to be 40% times the amount of taxable income we had. So we had 616,000 in taxable income times 0.4 or 40%. And that gives me 246,400. And then my current liabilities will just be the federal income taxes plus the 975,000 in advances. So 1,221,400. We'll double check it. We'll see that I made a mistake, which I know is impossible to believe. So let's see, 15,000 times $65. Let me just double check my math first. That is 975,000. So I'm guessing what they're going to have us do here is recognize that says they'll receive monthly issues beginning in January. So I think they're going to have us recognize that in the next year that they're not going to receive all 12 issues, right? A year from today. So these during December, I would say they are, but that would be my guess maybe as to what they're doing. So let's try 15,000 times 65. So that would be for the whole year. And then these new subscribers receive monthly issues beginning January 2016 in addition. So I'm thinking that okay, check it out. So here's what I missed. This is my current liabilities section as of March 31st, 2016. Okay, so I was thinking we were doing it at the end of December. So we'd have to recognize that at the end of March, we'll now have earned a third of those advances on magazine subscriptions, right? So that really now we only have like 9 months worth. So recognize that the $975,000 is the full year's worth. If we divide that by 12, that's the same. Like, so every month we're going to recognize that we've delivered those magazines and now we've earned $81,250. And so we're going to debit our advances on magazine subscriptions, that amount each month, and credit our subscription revenue. So we're just going to show that we've earned that each month as we deliver the magazines. So since it's 81,250 per month, at the end of March, we'll have earned January, February, and March's And so the amount of the liability, what we still owe, will be the remaining 9 months, right? April, May, June, July, August, September, December. Okay, so I'm going to take this number times 9, and we will owe $731,250 as of the end of March. And then we can add those together to get our total current liabilities of $977,650. Sometimes we learn a lot from our mistakes. Let's see if it's right. It is. And so we are good to move on.